Today's CPI numbers rocked the markets as US inflation rate eases to 6%. Eases to 6% is a crazy statement to be saying. I've been doing this a long time, and that's a weird sentence to read. Coming down to 6%, very far from the Fed's 2% target, but still better than where we were, nearing 9% rates back in September of 2022. Actually, June 2022. I'm sorry, I said that wrong. The U.S. annual inflation rate fell to 6% in February, the lowest since September 2021, and in line with market expectations, adding to signs that inflationary pressures are easing as a result of the Fed's tightening campaign over the past year. Core inflation, which strips out food and energy prices, edged down to 5.5%, also the lowest since late 2021. Now, does this mean that everything is going well for the Fed and that everything is going to be sunshines and rainbows from here? No. But let's take a look at what the market is reacting to, how the market is reacting to all of this latest news right now. Okay, guys, so what I'm looking at right now is a US dollar chart. And oh my gosh, this thing is so ugly. And that's probably a good way of reacting or explaining today's overall news volatility. There was no decisive move off the rip. We saw markets move up, markets move down, etc., etc. Overall, how would you read the numbers that came out? Again, we got 6% as expected year-over-year inflation, and we got 5.5% core inflation, core CPI, which was slightly higher than expected. Overall, the market did not react any way that would have been predictable. We shot to the downside, we shot to the upside, we shot further to the upside, we shot all the way down, we went back up, we went down, now we're up. It was a crazy news event. And guys, let me just take a moment to explain this concept. Many traders, when they trade the news, they love to do something like this. They love to put a buy stop up here and a sell stop down here. And they say, whichever way the market goes, I'm going to make money, right? But then when the market does this, they lose a lot of money. So let me just give you a warning. A lot of traders, I had someone in the live chat today mention that they blew their account doing this today. Please don't do this. It's a really risky way to trade news. Markets sometimes, the news comes out just as expected, but there's so much anticipation that the market still spikes around and causes these really ugly candles. You can see here's like the 1 minute bar. You can see, I mean, that is just a horrific chart. Despite that, let's take a look at the dollar on a broader picture. The dollar came down to what I consider sort of its last line of defense as a level of support. Let me show you this. So we had this key level come into play, and we stubbornly have held it so far. At the time of recording this video, I have put up on my Twitter that the dollar sort of was holding its own at this 38.2% retracement. It dipped slightly below it, tagged some lower support overall, but still has not necessarily broken this level. And so for me, off the daily chart, this level still looks intact until further notice, and this actually could be a bit of a retracement prior to another push up on the dollar. And I've been going over this analysis for a while now, so I'll go through that and give you guys my take on that in just a moment. Let's first take a little more bit of a tour here. Here's the gold chart, which gold popped big in the last couple of days here with fears around banks falling out of the sky and that sort of thing, that the Federal Reserve would have to slow their rate hikes and that sort of thing. But let me give you guys my perhaps unpopular take on all this stuff. I think the Federal Reserve still needs to raise rates substantially. They may not want to, but let me remind you guys, the Federal Reserve's number one priority, their number one priority, as they say all the time, is to make prices reasonable for consumers and for the economy. That's at least what they say. Is that their true purpose? I don't know. I'm not a conspiracy theorist.
There's a big conspiracy.
I'm just here reporting the concepts that are going on. Their number one goal is inflation, 2% target. We hit today 6%, still on the decline, that's good, but nowhere near that 2%. The Fed knows that if the interest rates don't rise fast enough to crush this inflation problem, that we're going to have some substantial aftermath to deal with. If inflation goes back up and it reaches like 10%, it's going to create devastating results. Now, of course, so does banks collapsing. But again, I think the number one priority has to be paid attention to. They want interest rates to go up to squash this inflation. So again, my thought is we still could see 50 basis points, although the market is trying to make a case for 25 basis points now. We'll watch to see how that all plays out. Despite that, I still think gold has some upside, not necessarily from here, but I've mentioned that perhaps a bullish support at the 61.8% retracement could be of interest. This is a 4-hour chart, of course, that I'm looking at, so a deeper retracement would be required. That's a bit of a ways from here. In fact, it's substantially lower. But if that price comes into play, perhaps gold looks long. I'll show you guys on the Edge Finder where we're getting this. And by the way, here's a look at today's market across the board. I know we're looking at a couple specific charts, but you've got yen crosses making substantial gains here today across the board. And you've got a lot of CAD crosses moving lower, gold on the decline as well here, as we just spoke about. Let me show you guys now what I was thinking with gold. Why is gold potentially a buy? Well, it's not at current levels, in my opinion. I think we're probably due for a pullback. We'll see if that plays out. But looking at the stats that we pay attention to, COT data looks really good. Big money is long gold. We take a look at retail sentiment, and the crowd is very short gold. Reason why I don't really like the idea of selling gold at these levels is because the crowd is doing that. Take a look at seasonality, and the month-to-month performance is expected to rise in the month of March. That's another bullish indicator. Trend is to the upside. GDP growth and unemployment favor gold bull setups, and then inflation and interest rates, of course, favoring to the contrary. So overall, I still think there's a case for gold bullishness, but not at these levels. The price that becomes more attractive, like I said, is coming into play at the 61.8% retracement, where I would potentially look for long side continuations. Now, I mentioned this dollar yen idea. I am long dollar yen. As of yesterday, things are doing pretty well on my trade so far. Really nice pop on this yen cross. And I mean, this is the thing about the yen. Love it or hate it, the yen, you have to acknowledge that this thing is a dramatic mover. When it breaks, it breaks. When it flies, it flies. And currently, it seems that we have found some support. My long idea was based off of this zone here. This is a bit of a higher time frame idea, but price pulled back on the daily chart even. This is a daily chart trade off the 50% retracement. Here you go. Similar to this dollar concept, the yen leading the charge when it comes to dollar bounces, and really seeming to find support around that 133 mark. Like I said, I am currently long on this trade within our signals group. And if you're not inside of our signals group, let me take a moment to remind you guys that you can check into that if you'd like to join the Discord. The link will be down below in the description with a promo code attached to get a discount. You have a available discount there that will cut the price to the membership group. If that is something that you're interested in, click that link down below. And also, let me show you real quick, if you want to hear about our signals or chat with somebody about our signals, if you're interested, head over to A1trading.com, and in the bottom right hand of the screen, we've got a "We Are Here" little button here. Click that, open it up, and you can chat with us. We are online and available to chat about the signals. One of my team members, if you type the word signals and send, one of my team members will answer your questions about the signals and the Discord and see if that's something that might be helpful to you in your trading analysis. Now, I mentioned I wanted to go through the dollar case that I'm still bullish on. Justify yourself, Nick. Why still buying the dollar? Well, here's why. The dollar, in terms of big money, still long. 65% of institutional money, according to the non-commercials data from the COT report, shows us that they're long. And then the retail sentiment is less convincing, as it's pretty mixed. You've got NZD/USD. The crowd is shorting the dollar. They're buying the NZD. When you take a look at the gold chart, people are shorting gold, buying the dollar. On USD CAD, they're shorting the dollar, buying the CAD. So retail sentiment is all over the place for the dollar. I can't really give you a decisive idea there, but what I can show you is I mentioned seasonality for gold. Let's look at something like, for example, the pound. See what's going on with the month of March. March is historically a negative month for the pound against the dollar, as you can see in these two charts. These are the last 5 and 10-year averages, respectively. We historically see the pound dollar drop in March. Something to think about. Let's go take a look at the pound, see what's going on with that today. And you can see not a whole lot. Despite that, we have not made a serious move. I don't love this chart for anything here. This is a daily chart, and the 4-hour chart is also pretty choppy. I don't love it, long or short, but again, something to think about if you are someone who trades the pound USD. We historically see some decline there. Dollar yen, part of the reason I'm long is we get a slight expectancy to go up in March and April. Part of my forecast there for long side trading action. Of course, guys, this is all available within the Edge Finder if you don't have access to the Edge Finder and you would like access to that. Also, that is linked down below in the description. I run a company. We build software tools for traders, and if that's something that you think would be helpful to you to add some level of software and more intelligence to your trading, then click the links in the description and you can find out more information about our software tool, the Edge Finder. So thank you guys for watching today's video. I hope it was a good trading day for you. I know a lot of people lost a lot of money during all this volatility, so please be careful. If you made mistakes, it's okay to make mistakes. Just learn from them. Don't make the same ones over and over. Thank you so much for watching. Have a great day, and we'll see you next time. Before you go, make sure to check out our free Discord channel linked down below in the description. And if you want to try out some of our products, our software tools here at A1 Trading, we have free versions available also down below in the description. Check them out for yourself down below. Also, if you enjoy our content here, we work really hard behind the scenes to bring this content to you each and every day. And if you enjoy our content, it would mean a lot to us if you hit the thumbs up button before you head out. Thanks for watching.